Welcome to the Rigatoni Capital podcast. I'm your host, Colin. It is the morning of April 9th, pre-market. The weather, very cold on Wall Street, 36 degrees, went to freezing last night. And it looks like it'll warm up slightly today into the, I would say, 50s. And that means that the stock market's going to be flat when you have a cold day, but it's kind of sunny. And then, of course, Masters start today. The Masters starts, so a lot of folks are going to be watching that instead of the stock market today, instead of CNBC. So I would assume that we'll have 2 days of flatness in the stock market. That is the type of stock market investing information you're going to get from this show. Yesterday, I had Simeon McMillan on the podcast. Simeon McMillan writes the Accrued Interest newsletter on Substack. He is firing on all cylinders right now. He is, I would say, an expert at all tech, media, advertising type of stocks. So we talked about Meta, we talked about Netflix, and we talked about AppLovin. And I had a few questions for him, trying to get some clarification on what the heck's going on with these companies. But these three companies, I mean, there is breaking news every single day. I mean, we know that Meta came out with their Muse AI application, or their LLM, yesterday. I don't really know much about it. I haven't had a chance to look into that one. Maybe that's a show for another day. And, so anyway, I did this interview with Simeon, and I had somebody ask me, like, hey, what's going on? Are you doing the podcast today? And I said no, because I had a pre-recorded podcast with Simeon I was doing. And somebody was like, today should be a wild trading day. Yeah, pre-market looks great. What are you thinking? That was yesterday when we got the ceasefire news overnight. And I said, I'm not thinking anything. I'm not thinking anything. I'm not a trader. So yeah, it's a day where people, investors, meaning traders, have to, move in and out of whatever they're doing, or they get called out of their position, or they have some kind of trade that they have to exit or something. And there's a lot of hands being shifted around, and like, that's not what we do here at Rigatoni Capital. We literally haven't done a thing since US struck Iran back on February 28th. I've done this podcast pretty much every single market day, and I've come on to tell you that I haven't done a thing. The only thing I was interested in doing was maybe buying, like, I saw American Express there trading around 292, and I was like, yeah, like something like this I'm interested in. But, the market only pulled back 10%, and it only pulled back 10% one day. And there just wasn't that much. Like, I want a 3-day rule in that sense. I want to see the market be trading below 10% for at least 3 days. And we just, bounced off of that so fast. Google bounced really fast off of its lows there. And, I had Google on my watch list. I'll show you my watch list right now. But yeah, just like for investors, something like that, that's all noise, that there's a ceasefire and the markets are up like crazy, because we're not trading. So we didn't have, it's not like we had to close our VIX calls or something, and it's not like we're buying now. It's not like we're buying VIX calls for insurance or something. We're not traders at Rigatoni Capital. This is not the show for you if, you think that you're going to get some kind of trading advice or hedging advice, or, like I said, buying VIX as an insurance play, like a certain percentage of your portfolio goes to VIX now that it's dropped below this moment. That's not the show I'm doing. And I hope people understand that. And I think most of my subscribers now do. I think I have literally a very small amount of subscribers on YouTube, but I do post this in other places, and I think people, certainly enjoy it. It looks like the Nasdaq 100's down slightly, S&P's down slightly. Like I said, this is all weather related on Wall Street. Whatever the weather is, that's a theme here is just weather. Gold's up. Bitcoin is slightly green. That's cool. 10-year looks like it jumped from 4.23. Well, it's trading around 4.3. It doesn't matter. So anyway, guys, I just like to just look at the stock market slightly before I dive into what I want to talk about. We're going to talk about Palantir and get into what Michael Burry said yesterday about Anthropic eating Palantir's lunch for sure. We'll talk about that. I am sharing my screen right now. Looks like, look at that bounce from the Freedom 100 Emerging Markets ETF. And, that is obviously impacted by the Kospi. And it looks like the Kospi bounced, but it looks like Freedom bounced a lot harder, doesn't it? Than if I compare it to the Kospi. SMH, definitely what an unbelievable bounce. And a lot of that's driven by, TSM, I'm guessing. I could look at TSM. I don't think a lot of that, even though NVIDIA is its largest holding, I don't think a lot of that bounce came from NVIDIA. I own NVIDIA, so I have a pretty good idea of how it's trading on most days. I'm not sure where that TSM bounce is. It could be just, let's look at Lam Research real quick. Lam Research had this bounce. These memory plays that are inside of the SMH. I'm not saying Lam Research is just a memory play. It's not like that's not the deal. Let's look at Micron real quick, so we get an idea. Not that much of a bounce. It's a nice bounce. A lot of these V shapes are what I'm looking for right now to see like why the broader. Let's just all like the sector ETFs. Why are they bouncing? Like XLF, people said financials did really good yesterday. XLF, look at that bounce. And what's XLF's top holdings? It's probably like a Berkshire, JP Morgan type of stuff, right? And then, of course, XLE is just kissing its 50-day. It's literally making out with its 50-day, the XLE. And we can look at American Express that had its nice bump. Now it's back to kissing its 50-day. And even something like the ITA, beautifully, and I told you guys I was looking at maybe buying it, but I didn't. I already own it. By the way, I already own all these stocks. The only stocks I don't own on my watch list, if you're watching on the screen. All right, I don't own Goldman Sachs, and I'm going to tell you that I missed Goldman Sachs. I missed it. That stinks, huh? Never want to miss Goldman Sachs. TransDigm Group, I own it. I'm telling you stocks I don't own. I don't own Google individually. I don't own American Express individually, but everything else on this list I'm looking at, I own. Oh, I don't own the ITA. So there's like three assets on here I don't own. Now, yesterday we got this morning we got initial jobless claims at 219K. I think Mark, who writes, I think his Substack is Learning, Investing, and Thriving. Mark Rudijev. He was the one that said, like, hey, initial jobless claims are the way to look at the job market because it's way less lagging than the monthly jobs data we get at the end of the month or at the first of the month. And, this comes out every Thursday, and hey, as long as we're in this 200K to 250K range, that is the sweet spot that I'm sure investors all agree with. But that we are in that sweet spot. PCE came out this morning, 0.4% month over month, which seemed to be in line with expectations. And PCE was 2.8% year over year, and that was expected. And PCE came in line, I guess. So to guess if the Hormuz is still blocked, the Strait of Hormuz is still blocked. If it's not blocked, if only 15 ships can go each day, and it's all this bullshit, and the news changes every single minute, and then you hear that this Iranian guy says that this ceasefire isn't going to work. It's all just headline bullshit stuff, and don't let it impact your investing, please. Unless you're a trader. This is a screen of Michael Burry's post yesterday claiming that, Palantir, Anthropic, Claude, right, is eating Palantir's lunch. This is a screen that is now not available. This is on Substack. So he deleted his big tweet Substack note from yesterday. He also took it off of X, and Palantir did sell off 5% yesterday, around there. So, what's up with that? What's up with that? I mean, if you look at his comments on X and on Substack, he has a lot of pushback from the investor community and from his subscribers and followers. Of course, there were a lot of people that said, yeah, go get them, that were responding. And then, of course, from last night, he had on Substack, he said, subscribers, Michael Burry, who is the newsletter of Cassandra Unchained. He said, subscribers, we are discussing Claude's introduction of managed agents in a new chat discussion now. And, you can only look at that if you're a subscriber. It must have been some kind of forum discussion. And, okay, so that was yesterday, and that is actually still up. And I told Gemini, Google, I said, it seems that Michael Burry has deleted his Palantir Substack note and tweet from yesterday. Remember, he said that it was his opinion that Anthropic was eating Palantir's lunch due to enterprise business subscription models that because it's growing so fast. And then he also attached a post from Ramp, and the post from Ramp, the entire post was just showing you how Anthropic has increased its revenue and its probably subscribers faster than anything in terms of the way, how long it took Palantir to get to this certain amount of revenue. Anthropic did it in months, right? But it's showing you Anthropic eating OpenAI's lunch, and it shows you how they are just crushing all these other LLMs. Okay, that was the point of the article that Michael Burry posted, but nowhere in that post on Ramp does it say that it's impacting Palantir's business model or its future business. And by the way, what I'm reading to you here, it says Michael Burry recently deleted a Substack note in X, formerly Twitter, post from yesterday claiming where Anthropic is eating Palantir's lunch. Then it says the move follows a pattern of behavior for the big short investor who frequently deletes his social media presence after his commentary goes viral or triggers significant market movement. So to say Michael obviously felt silly that he said something that wasn't really correct or, got a lot of pushback, that's why he deleted it. That's not true either. It's just that's his thing. Okay, and I wrote on Substack, and it looks like 25 folks have agreed with me. I said, with all due respect, I'm confused by Burry's Substack note that note today about Anthropic eating Palantir's lunch. Even I have a broad understanding of why a Fortune 500 company would choose Foundry over an Anthropic API subscription. And Jack Bowman agreed. He said, even more confusing to me was his reference to the RAMP AI data as his backing for the claim that Anthropic is taking 73% of new enterprise business. That study only looks at chatbot API subscriptions. Palantir is rightfully excluded from the data he's referencing. 100% correct. Will Gaines wrote on X, commenting on Michael Burry's post as well. And he said, Anthropic and Palantir aren't direct competitors. They operate different layers of the AI stack. Anthropic builds models. Palantir builds platforms that deploy these models for enterprise and governments. Palantir can benefit from integrating the best models, including Anthropic. Well, I said that made sense. And then someone wrote, haha, you make it complicated so no one understands. They are direct competitors. Sky is the limit wrote that. Will Gaines said, explain how they are direct competitors. I may be misinformed. So then the comment from the troll is, Anthropic can easily vibe code another Palantir, which makes them direct competitors. So Will Gaines wins that argument. Okay, and then somebody also commented, Bear Loves Bull is his name on X. Mr. Burry, can you please make it clear that Anthropic is a model provider and Palantir is a platform for deployment and data? And most business workflows, they actually work together. That's true. Like even Palantir uses Claude Anthropic, from what I understand. Models make intelligence and platforms like Palantir turn it into decisions and workflows. The RAMP stat, 73% of new AI spending is used incorrectly. It shows how vendors are chosen one by one within a specific data set. Let's not mix it with the total share of the business. It also doesn't take into account that many businesses are multi-model by design. They don't get rid of OpenAI or the other models. In reality, they actually add Anthropic to them. Then you are comparing Anthropic's ARR ramp to Palantir's 20-year build. It's not the same category comparison, Mr. Burry. Anthropic is scaling in a foundation model and cloud distribution cycle. Palantir is scaling in a high-touch government deployments with longer sales cycles, but deeper integration and stickier revenue. And that can also occur in the enterprise division, hopefully. That's what I'm hoping, because I'm a Palantir investor, if I haven't said that already. As per your low margin and small statement, that's about the government side of their business. And he's saying it was high retention. It's just high retention and mission critical. Okay. Now it is helping to grow its commercial AIP. We know that the data showed that demand for AI is growing across the stack. They are literally not displacing another. So, and then here someone wrote this 8 hours ago that, Michael Burry deleted. I'm not going to read his post, and I like Michael Burry. I definitely, we all have a lot of respect for him. He knows accounting more than I'll ever know in my 20. If I'll never understand accounting like him. So he is so brilliant when it comes to reading, I guess, like an income statement, a balance sheet statement. I mean, the guy is a genius, but does he understand Palantir's business? It doesn't sound like he does. Now, he could be right. The stock can continue to sell off and Michael Burry makes money on his short, but or he has puts probably. But, that's for a different reason. It's just because Palantir is probably going to be a volatile stock because it's so expensive in terms of its price to sales and its multiple. I mean, obviously, we've never seen a stock like Palantir. It's one of the most expensive stocks in history. At one point, it was the most expensive stock in history, I think. So it definitely, and I have been on here to say, like, yeah, it's going to be very difficult for Palantir to grow into its valuation. but I still see the moat in Palantir, and I still like the executive team, and I still think that it's such a sticky application. And my whole idea was like, if it's so sticky with the government and they can get into these Fortune 500 companies, at least in the US for now, that is a huge deal. If the whole bullish point of owning something like Palantir is to hope it grows into its valuation versus by replicating what they did with the government and other democratic governments, like Israel, and I'm sure they work with other U.S. Friendlies, and their governments. So Carl Bitts also commented on X to Michael Burry. They are not competitors. I use both products daily. If anything, frontier models make Palantir easier for businesses to implement, deploy them than ever before. And I said, thanks, Carl. It's good to just know. Now, this guy could be lying, Carl Bitts, but it's good to the guy's got a check mark. It's got his face in his profile, so it's unlikely that this is a bot. So this is my whole point, is that if you're not doing the homework on Palantir like we are, Michael Burry maybe is doing the homework in terms of the accounting side of things, and that's really important too. But I definitely sit there, and like I told you, anytime Shyam Sankar, which is the CTO of Palantir, he's been doing these rounds on these podcasts in the last few months, probably giving Karp maybe a little bit of a chance to sit back and chill. And, if Sankar is going to be the predecessor to Alex Karp, meaning he'll be the next CEO, possibly, if something were to happen to Karp. Is he the next man in line? Anytime he goes on a podcast, I listen to the whole entire thing. I try to, at least. I also subscribe to Palantir's YouTube channel. I subscribe to people like Carl Bitts that say, hey, I use Palantir for my business, and I'm going to explain to you a little bit about what Palantir does and how the advantages and the disadvantages, and someone like that has credibility because they're being honest about the product, and then of course this guy's saying I use both of these products daily in my enterprise, and they are different. They are different. And if Claude or Anthropic's going to replicate something like Palantir does, that I don't know. We don't know the future. All we know is that we just know that they are different. And I'm not going to come on here and explain to you why they're different. I'm not a tech specialist. I'm not in this industry. I'm just telling you common sense stuff here. And common sense stuff here is that I've done a little bit of work on Palantir, so I understand the difference between what Anthropic, agentic AI type of business subscription enterprise models can do, and it is powerful. And then something like Palantir can do is a little bit different. That's the ontology on top of all of this stuff, and I can't sit here and talk to you about it like I am an expert. I had Satishan come on the podcast last week, and without putting him on the spot, I'm sure he would be able to describe it a little bit better, because that is his industry. He's in the tech industry. He understands Palantir better than I do, and I trust someone like Satishan more than I'm trusting Michael Burry right now. It just tells you, because he knows the product, and he's worked with enterprises that have worked with probably Palantir. So anyway, guys, I just like I said, definitely like Michael Burry, cool dude, definitely so smart. I just think the reason to be bearish Palantir is because the high multiple and not being able to grow into its valuation. I'm going to read something to you that Rob Arnott wrote. Rob Arnott is a well-known value investor and chairman of research affiliates. And he was on like Wealth Track months ago, and I wrote about this. Arnott used Palantir as a clear example of what he considers a bubble. He wrote, how do you justify a price that's 100 times sales? That's pretty aggressive. And so the company would have to, let's say, 50-fold growth. 50-fold growth. That's a 50, not 50%, of course, in the coming 5 to 10 years in order to justify today's price. Is that possible? He says, I suppose. Is it plausible? That's a little more of a stretch. So it's not. So if it's not plausible, then it's a bubble by their definition. So when you do 50 times, it's called 50-fold growth. If you do the math, and let's just do the low range. I know Palantir did annual revenue well over 4 billion, I think. Let's say that they only did revenue of $3 billion today, which they don't. They do well over that, and they're going to do a lot more in this coming 2026 calendar year. So for them to get a 50-fold increase in their revenue, it would imply about $150 billion in annual revenue in the future. And that outcome would require, that's about like a 30 to 40% CAGR assumption on revenue. So anyway, that is the bear case. It's just that it was priced way too expensive because, one reason I think that the stock was priced too expensive, and by the way, I own the stock and I'm down like 10% on it, and I'm not selling it because I'm willing to gamble here that I think that Palantir is the real deal. And I'm willing to hold something volatile like that. I think the upside is incredible in Palantir. I think, and if I lose on this position, it's not going to be the end of the world. Okay. And then Patrick Mayer wrote, I'd buy Palantir on this misinformation. They may compete for AI budget spend, but the products don't compete. They're complementary. Agree with Patrick Mayer. So that was a long rant. It wasn't a rant. I was just trying to explain to you how I'm looking at this Palantir situation and how I'm not selling it or anything. And what Michael Burry said yesterday, is more of a bullish case for me. Like, okay, like maybe he doesn't understand Palantir. This is a funny tweet. You survived the great 4% crash from all-time highs. But remember, we were in a 10% correction, guys. All right. I'm not going to get into this. Liz Ann Saunders said S&P 500's forward PE currently stands at 19.5. That's up from March 30th low of 18.9, but well below last October's high of 23.1. Okay, well, it's just good to know. I mean, I think, when it doesn't really matter, to be honest with you, what the forward PE is of the stock market. That's not what causes people to come in and buy, but, it makes me feel better that we're below 20. It means we have more room to go here, right? We have this. There's more space here. There's more room here in that to go up to this 23 range, which it looks like the highs of the last, 5 years. So definitely recommend also reading Sergey's latest post, which came out yesterday on Substack, which is on Cloudflare. Cloudflare is winning big in AI infrastructure. Is it already priced in? Sergey writes the Substack newsletter called Compounding Your Wealth. I'm not going to get into that here today, guys. It's a long, deep dive on Cloudflare net. I'm guessing net is the ticker, right? Hope so. So, yeah, net. But definitely, like, what a difference between the mainstream media, I still notice, like, which is CNBC, versus something like Substack, which, I'm sure there's a lot of retail investors on Substack writing. But what a difference. Even the folks that write on trading don't try to predict the market. But when you go to CNBC and you listen to Siegel, he gets caught, like they kind of push him and they push him and they push him, like whoever it is, Becky Quick or whatever, they push him into trying to give you something that's a prediction. Like Siegel is trying to predict where interest rates are going to go. and where he thinks CPI and inflation is going to go, and where he thinks oil is going to trade at 3 months from now, and what the stock market's going to do, and what he would do right now if he had cash. And he's saying I would hold. Well, that makes sense because that's what I'm doing. Meaning I'm not buying or selling stocks right now. I'm just holding my portfolio, my positions in my portfolio. But the prediction stuff, it's just, once you see it, you can't unsee it. Once you understand the idea that you shouldn't predict the stock market, it changes, rewires your brain a lot to notice like who's bullshitting and why this isn't really important for you and your long-term portfolio, unfortunately. And I don't think it's what, I don't forget his name, Siegel, the professor of finance, whoever, whatever. He's a professor at UPenn, and you realize what's supposed to be entertainment and what's not. And these poor guys, it's not their fault. They're being asked these questions, and they get into this entertainment business, and that's a shame. I like Tom Lee. I just don't know, is he getting caught into this whole side of things where he's just predicting where things are going, and hopefully not, so thank you guys. So someone also asked how to buy the SpaceX IPO. Well, you just buy it when it IPOs. Like somebody wanted to know how to get into the SpaceX IPO. Well, when it IPOs, you buy the ticker. Just from where I sit, I don't know a lot of information about SpaceX. I haven't done crazy research on it. And I know there's a potential for it to do a reverse merger with Tesla, and the ticker would be Elon, and all this fun stuff. My whole point to bringing this up is that, like, I'll never, it would be really, and I never say never, but like in my mind, I've seen so many IPOs just be a way for wealth transfer, literally, where the investors that have held on to SpaceX for so many years privately can get out of their position and liquidate. So definitely don't understand why you would be that eager to buy a SpaceX IPO. Of course, there's going to be a lot of hype around it, and it can pop, on the IPO. Like if we're in this type of environment that people just want to deploy cash. Sorry, I got a gnat. It's probably from Joaquin. Does anybody know about fig trees? Guys, thank you so much for joining me on the Rigatoni Capital podcast. I will see you guys tomorrow, but I will be with Kevin Bagholder, and he writes the newsletter on Substack, which is My Two Cents, and we're going to be talking about gold and Bitcoin and stuff like that. So I hope you guys will join me for that show as well. And please subscribe on YouTube, even if you don't watch YouTube, because, it's hard for me to know who actually is interested in this show. If nobody's interested, I'll know by just my subscribers on YouTube. If you are interested, then please subscribe, and it'll really help me understand on if there is a market for what I'm trying to do. Again, kind of like a daily market day podcast, but for long-term investors. And I'm also on Spotify. I prefer to listen to podcasts on Spotify. I can lock my phone and take a walk. But if you don't mind, please subscribe on YouTube, just because I can visually see that you are here and you exist. All right, guys. Thank you so much. Have a great week. Thanks.